Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey.
Dan, how you doing? Excuse my cough trap. Oh, I've got this cough. Not even sure how I'm going to get through this, but we're going to work it out. Before we get started, we want to let you know, right? Yeah. First world problem. Before we get started, we want to let you know that if you are interested in hearing about grain market movements and strategies daily, you can sign up for our Ag Hedge Hotline, hosted by expert market strategist Ted Seifert. Totally free, gives you the chance to connect with us personally if you have any specific questions about markets or agricultural commodities in general. If you're interested in learning more about how this price action works and how to make this price action work for you, it's a perfect way to take a first step. Link is in the description below to sign up for that. Totally free, zero commitment. Dan, what is going on out there?
Man.
Right? If you don't like it, we'll give you your money back.
It was kind of an interesting end to the week, wasn't it? A week that started off looking like, kind of nasty. Then, depending, I guess, where you look, then there's a little bit of a midweek bounce. And here we are back at, putting pressure on it into an option expiration Friday, everybody. And I think there might be a little something to be said about the fact that it was option expiration today, right?
Like maybe they put it where they wanted it and that's where it stayed.
Right. And it's an interesting option expiration because it's in that tail end of February when we're into that insurance pricing window too. So you've got like kind of multiple dynamics at play for, I don't want to say the conspiracy theorists out there that think these markets are set up for or try to do anything in particular. But the point, that I'm trying to get at is that, markets trade for a reason. And while there may not have been as much like news related events this week for, just centric to agriculture, it was certainly an interesting week for where we are in certain cycles, right? We're sandwiched between that weird time of the year where we just got out of quarterly grain stocks estimates for the previous marketing year. We're just starting to talk about, new acreage estimates for our following planting season. We're in that insurance premium window, and we just had option expiration today where it feels a lot like, the tape was being painted and being put, just like you said, right where they want it.
And so along those lines, we have finally arrived. We are just today, we are not recounting any news that was made up by other people, but we're going to make up our own news, which eliminates the making up middle person, and just Dan and I will make up some stuff right here on the fly. To that end, what I would like to ask you is let's play a quick game. Let's play Name the Dominant Fundamental. So corn.
Dominant fundamental in corn. Obviously, I'm torn between U.S. export sales being really, really strong, right?
Robust,
and at a time of
robust.
Right, yeah. And then also, safrinha corn crop planting rates in South America. I'm between the two because
getting it done.
But they're on opposite sides of the spectrum, right? You think, the robust trade out of the U.S. and sales is a bullish, fundamental development. But on the other side of that coin, you've got a crop that we thought might be getting in late, and then all of a sudden, whoa, have they caught up and put, acres to work there?
And they do that
way quicker than people anticipated.
Yeah, they do that, don't they? They get some stuff done. God bless them. However, it is roughly the end of February. We're rapidly approaching the end of February, and so they have finished planting kind of right into some potential for dry period. We'll see how that plays out. Some talk for precipitation in certain spots in Brazil. Some talk for potential precipitation where crop ratings are getting a little better in Argentina. And they could certainly use the precept. It will arrive after more hot and dry. So that would be interesting. But I think I agree with you on that. Dominant fundamentals, safrinha corn crop. You're going to have to still watch close. There's no room for error in that safrinha corn crop compared to what we have here. And then rather robust export sales. Every week we think, okay, this will be the week where it slows down. And so far, not yet, huh?
Yeah, and it's amazing how they get these sales done without triggering a overnight flash sale response too. I think the last flash sale we had was on the 14th, like Colombia, if I'm not mistaken. So it's right. It really blows my mind how
might have been a Japanese one.
That whole system worked. Maybe it might have been. But the point being is that it's amazing how they get this 1.4, 1.5 million metric tons sold every week without a single order being over 100,000 tons and needing to be reported. It's they're tricky how they do that.
Dominant fundamental in beans.
Dominant fundamental in beans. Well, obviously, I think that shortened up crop from last year and that lower carryout in the U.S. has sparked some of that initial bid. But now I think we're back into that South American production number and arguments there over it. Now, obviously, U.S. demand for U.S. beans in terms of that export number has been less than thrilling over the last several weeks. So I think that that's something that we're constantly watching and needing to keep an eye on here. Is that we haven't seen the big purchasing from China. This time of year isn't always that big, but like exports have really slowed down in beans. And last few weeks, this week was good. Don't get me wrong, 480,000 metric tons isn't anything to sneeze at, but we got a lot of catching up to do. I think that only brought us to 12 or 15%, of the yearly amount. And we usually want to be around that 20% mark. So we're behind on those beans export sales. I think that's probably the dominant factor here is like, where is the demand? And certainly if it's not coming from crushers in the US, it's got to come from that export market.
Dominant fundamental could be, and I guess this is maybe not the game we're playing, but bodes or bears mentioning is that according to the New York Times, Trump administration is working feverishly to put together some blockbuster trade deal with China. Maybe not a dominant fundamental right here, right now, but I wonder what your thoughts are on if they do put it together and the Chinese say, oh yeah, we might be able to shift some purchasing to this extent. You would imagine that it would not be small and likely impactful, wouldn't you think?
Yeah, I would imagine so. I think that there's definitely an element here that Chinese demand has been in question. And I think we'd all like to see that be put to rest at the end of the day, right? We're sitting here kind of twiddling our thumbs until we see more from China and the U.S. in terms of kind of figuring that out. There's still a lot of speculation that we're just going to end up seeing like a Trump 2.0 type deal come into, or I'm sorry, a trade deal 2.0 with China. But so far, right, we haven't seen that happen, and it doesn't exactly make things easy on us.
And so not so much a fundamental, but maybe a dominant theme here as we go forward, or rather an episode where the technical turns into the fundamental. If you look at this chart, we are all of a sudden beginning to have a hard time doing any business over this 18-day moving average on a May beans chart.
Yeah, I think it gets really easy to have a conversation about those technicals now, right? You've got the 18-day moving average, the 200-day on some others like in wheat. These are coming into play. We got rejected at the 200-day on soybeans. Now it's struggling to get back above that 18-day. You had a higher high and a higher low day over day. And I'm sure you'll tell us shortly how we closed on the week on these numbers. But it's not, it's not an easy picture to paint for for the bulls right now from where we are for beans, certainly from a technical perspective. But, some other markets like wheat and corn, for example, you could still paint that picture of being in an uptrend, pulling back, hitting some technical levels and a pullback, the 18-day in corn holding there, which I'm sure we'll talk about in a little more detail here. But it's almost like you've got the fundamentals that have been playing out, and now the technicals are starting to maybe, I don't want to say take back over, but in a time frame of the year where things have been a little hard to sink your teeth into for what is driving the market price action at this time, right? It seems to me that those technicals are coming back full swing.
The thing that I forgot, I just remembered, but I'm going to save it for when we do the numbers. How about wheat? So wheat, it's always tough to kind of find a fundamental. We're talking about here in the United States, the potential for crop damage because of the cold in wheat that wasn't protected. You've got favorable or unfavorable, depending on the wheat conditions in other places in the world where we're growing wheat. Help me find a dominant fundamental in wheat. Can you point to one?
Well, The Russian-Ukrainian conflict, okay, kind of coming to a close, perhaps. Maybe some peace deals there. Wheat does not necessarily like to rally during peacetime, particularly if Russia's coming back on the table as a global trade there. We know that Russia has had no problem selling commodities, even with U.S. sanctions, versus via their their what are they called, the ghost fleet, for oil and even selling agri
Yep.
ag products through to Ukraine anyway. So
Doing a
I don't
very
know how
good
much
job.
that is a fundamental, right? But at the end of the day, I think that wheat has found itself maybe, caught a little short, right? If you want to call that big short position in the market a fundamental, okay,
I do. Yep.
it's certainly right. Commercial, or there is pressure there from the speculative funds that are now maybe caught short wheat a little bit. And if that doesn't, if that continues to unwind, how much more, rocket fuel does the market potentially have here is the major question.
Yeah, and that's and you can hear you can hear a widely read newsletter writer saying in the background, no topping formation seen as of yet. Certainly a bit of a pullback, but
right,
it does not look like a top, does it? How about fat cattle and feeders? I would jump in and say, to me, the dominant fundamental this week was the erosion in cash trade. Right, cash trade numbers come down just a bit, and here again, your fund position. Everybody's going to be looking at commitment to traders today to see, are the funds beginning to liquidate this position? Is this market vulnerable to continued fund selling? If there has been fund selling, right? We don't know yet.
Right, and I think that there's something to be said for that too in those markets. And we're just going to have to continue to watch and see if that's going to be the big case. I know we got cattle on feed here coming up. You did mention cattle here. We're going to have to edit this part too, Carter. I got distracted there for a hot second.
That's all right. That cattle on feed number came out a little bit earlier, but I don't have that information with me just yet. How about the weekly numbers? Corn, we opened the week at 508. High was 518 3/4 in May, 504 1/4 low. Closed it at 505. Not a great look for corn here all of a sudden. Down on the week, 3 3/4. No harm, no foul.
Mm-hmm.
Funds are long, 354,000 guesstimate number coming into the day. 18-day moving average 504 1/4. We have not spent a significant amount of time below the 18-day moving average since when? Can you see it on that chart? Since November. And even then, it wasn't really a lot. We have largely respected the 18-day moving average in this uptrend for some time. And so now here we are, kind of moment of truth for corn. Dan, sincerely, I suspect that this lack of momentum in corn is more a function of unwinding of corn or a wheat corn spreading. And it's hard for corn to get some giddy up and go when your funds are selling into it that way.
Absolutely. Closed the day on that May wheat corn spread at 99.5 cents over. So back almost above that dollar. It too bouncing from an 18-day moving average here yesterday in the trade at 85 cents over. We got as low as 55 cents there at the start of February, basically. And this market was up around $1.60, $1.80 over around harvest time frame. So, I'd be shocked if we don't continue higher, at least above that that high here for the month of February at $1.07. Again, closing at 99.5 today. It does seem like we are in the midst of unwinding a short wheat, long corn position in this market. And you saw that on the chart today. I mean, quite literally at one point, wheat was up and corn was down. Granted, we didn't close the day exactly that way, but we pretty much did, I guess, in the Chicago to the board corn, Chicago wheat to the board corn. But nevertheless, I think that's a big trend here and on significant volume too. We're pushing higher on that spread as well. So there's participation there is what Joe and I are getting at. And that's something to pay attention to here.
And we're always looking at that, right? We're always concerned about price action that is not confirmed by increasing, or at least what you would hope to see as adequate volume. And so when when volume is moving higher and price is moving higher and open interest is moving higher, you get a bit more confirmation, I guess technician would say. Am I right about that?
Yeah, that's exactly right. It's, volume is the proof of participation here. It's not just a market moving around and tapping price.
How about beans? We opened the week at 1049 in the May. The high was 1066 and 3/4, low 1042 and a half. We closed at 1057 and a quarter. That was up 4.5. Funds. Now, here is the dominant fundamental that I forgot earlier, and now I'm going to remember it before I forget it again. So let me remember. Funds coming into the day with a guesstimate of about 29,000 contracts. That's down from what I think was 40-ish the last time we visited this way, Dan. I want to caution folks to watch the fund trader in beans. If they're beginning to head for the exits on this long position, it seems to me that it will be difficult for beans to hold in here, right? If the funds turn sellers, that should be respected. I've got an 18-day at 1062 and a quarter and a 10-day at 1056. So we're kind of bounded between the 10 and the 18-day. 10-day and 18 have crossed over.
Yep, and you got the 100-day moving average down there that was support, I guess last week, a week from here. So very technical chart if you really want to get down to it there for the soybeans.
This market gets good though real fast. Tell me if I'm wrong. If we get out over that, what is that? The 200 overhead at 1073?
Yeah, that's exactly right. You get above that. Certainly, you get above that 18-day to start off here. At the close above today's high would be, the first level I'd be looking at. Then that 200-day at 1073. You got the old high at 1090. And then you got to go to the chart and start to say, hey, we are getting back above levels that we haven't been in some time, going back to like May of last year, and that $11 figure, it doesn't like to sit still at there. So you start to wonder how high can it press and go. And I'm not saying we're going to $13 beans here, but that $11 to $12 area might be a range in this market that gets transited rather quickly.
If, and this is a big if we're able to get out and comfortably stay above that 1073 basis the May.
That's absolutely right.
If you are not out over the May, if you don't flip that 10 back above the 18-day, if you can't sort of recharge this uptrend, then in my mind, this thing starts getting heavier and heavier. And what you may be seeing on this chart, and here's another dominant fundamental, is the size of that South American bean crop that has to find a home here any minute now. And, I think this is going to be a real test for this market and a real test for these things that are coming down the pipe. Can you get some clarity on biofuels? Can you get the greatest Chinese deal in the history of Chinese deals? And can the funds get back on the bid and turn buyer again? And so a lot of things to kind of keep an eye on here. A lot of tea leaves that we're going to be able to use to sort of stay directionally correct. It's difficult when it's just moving sideways, but I have a feeling, and you and I say this from time to time, we probably won't be at this price level for very long, whether we're headed lower or whether we're headed higher. Shortly, we're going to have the answer to this question.
Yeah, you see that daily chart. We've gotten so coiled up. I mean, beans have been in a proverbial like 40 or 50 cent range here for just too long, and that range isn't going to sit still for very long.
How much longer?
You'd imagine.
How about products? I don't even know if we need to read all this weekly because we really didn't travel much ground. Bean oil was up 82, almost a full point for the week. So drifting higher there. Bean meal, there's another market that appears to be technically eroding or heavy. Is it consolidating for another move? This is the note that I left myself. Are we consolidating here for another leg lower in meal? Are we having trouble finding a home for the meal because of the bird flu situation? They're culling so many birds, and all of a sudden we don't need the meal. It's starting to stack up on shelves at these processors. Could that be what we're seeing on the bean chart as well?
Yeah, I think that's a pretty good fundamental reason on why there's been a drag on the meal price. I mean, meal has just been in a technical range and been unable to get out of anywhere. I mean, the last week we've been caught inside of maybe 5 points. For the last 2 months, we've been caught inside of 20 points. So just going nowhere really quickly. And it's not shocking to then see outright beans kind of doing the same thing.
Right. Wheat on the week, we opened May 612, high was 621 3/4, low 598 1/4. We closed at 604. May wheat down 9.5. Wheat finally taking a bit of a breather. 18-day, I wrote 590 3/4, and that's kind of the challenge, Dan. Right, your funds are short 80,000 contracts here. They're trying to I think that number is smaller than it was the last time we visited by at least 10 or 15,000. This market's trying to pull back to find some technical level of support that it can then mount a new campaign higher from. But that 18-day moving average is all the way down at 590 and 3/4, isn't it?
Yeah, and that's a long ways down to transverse if it wants to.
For sure, and still be technically kind of within your technical
you don't
pullback.
Yeah, absolutely.
Jump into the cattle. How about fat cattle? Opened the week 194.62.5. High was 195.47.5. Low 193.02.5. Closed it at 193.95. Down just 30 on the week. No great shakes. Cattle, fat cattle, seem to be rather resilient today in the face of down 800. Last I looked in the Dow. Dow and your tech stocks getting shellacked. But cattle kind of hanging in there. Is that because you got cattle on feed this afternoon? Is that because funds aren't selling it? What would you, yesterday's lower price action, you would think should have seen some follow through here today, but cattle kind of hanging out nicely.
And cash markets have still remained fairly robust here. We pushed up to a big high and it marked a high on both the feeders and the fats. The cash markets seem to have been pretty strong still, even in the face of the pullback. It's almost like, we're there's a bid there. It's just a matter of it's hard. Put it this way, it's hard for cattle, I think, to sell off as much as you'd expect them to in this risk-off move when you've got such a supply issue like we do, right? We got the slowest herd size in 50 years or so. So it's hard for them to really, I think, be convinced they need to sell off. But we did pull back from a technical perspective right back into testing those old summertime tops that we were at and the CME pricing here. So it's good to see, a old resistance level being tested now as support. I think it's a major level that probably needs to hold for the, medium to longer term trend if the cattle market wants to head higher. But if we continue to see this risk-off pressure from across the board, I mean, really a red day in our equity indices, which, if that spins off in a pretty big up day in the bonds and the notes, if that continues, cattle, is somewhat subject to that idea that, right, you need a strong economy to continue the trade there. So we'll keep a close eye on that and see if it. Right, exactly. Right. Is it, is there going to be a surprise next week if this cattle on feed report doesn't come out bullish? Right. Are we going to break some of those levels? For the time being, it's, I'm cautiously optimistic that we're kind of holding some of the bigger levels that need to hold to, I don't want to say keep the uptrend intact, but really I'm talking about an uptrend going back to last March, right? When we found lows and we headed all the way to highs from there. That uptrend isn't completely over yet. Certainly, we have a top in the market, and I think breaking back down below that 190 figure in the April fats, the 260 area in the April feeders to give us our front month kind of levels. Those are key levels you need to see hold in the short term.
Feeders did hold, opened the week at 266.92.5. April feeders high 269.97.5, 264.90 low. Last trade I saw was 267.55 and up 112.5 on the week. That's not terrible.
Seems like a pretty good close for the week, actually, on the feeders, given the sell-off we've had over the last few weeks.
When I looked at that feeder chart, the thing that I had to write down was feeders are marking time for what? What are we waiting on? And it could be this cattle on feed number report here today, kind of giving us an indication, and really maybe waiting for the market to digest what the resumption of animals crossing the border really means, right? And that people, and a couple of people have said this to me in the past few weeks, is that, does anybody really have any idea how many animals are out there? And so
one of the harder numbers to put a pin in, and you'd think in the 21st century, we wouldn't be, left guessing as much as we are. But I mean, look how hard it is to guess and estimate acreage numbers when we know they're all completely reported and accounted for, right? Cattle's an even harder number to put our finger on. Yeah. And certainly when you start talking about how many are walking and being carted across the border, another thing that's, almost impossible to completely know. At least with the way the data is collected. I'm sure somebody over at JBS or somewhere else knows, but they don't tell us.
They're not telling us. But indeed, feeders kind of hanging in there pretty good, right? And we're always talking about feeders are the leaders. beaters checking up, and maybe pointing toward higher prices next week, depending on what we saw this afternoon.
Absolutely. If they didn't fall apart and break in this risk off move, I'd say you got to be, considering, okay, are they forming a bottom here and could it hold?
Dan, Zaner Ag Hedge is going to this year's Commodity Classic, like every year's Commodity Classic. What does that mean for folks who are going to be out there at Commodity Classic as well?
Well, we're in booth 2005, so come check us out. We'll be working the room there as well, but we'll be, I think we'll do some live bits there from Commodity Classic to give everybody the feel and give everybody the idea of what the talk is of the town. I got a hunch it's going to be a lot of SAF and sustainable aviation stuff, probably trade deals. Because of the tariff talks that we had, and certainly I'll be interested to hear what the USDA has to say from some of our new USDA appointees that I hopefully will be there. Get some real, this would be one of the first big moments they get to address really the broader agricultural community. You and I showed up early and in years past, and we're never that impressed with what we had to say, but I'm hopeful that we'll start to get some clarity on a lot of the unknowns. Whether it be the payment unknowns, whether it be SAF plans, E15 and what is the ethanol, the outlook for other biofuels look like, right? Those are all going to be the big talks because this is the future, right? We're talking about how we grow our energy as a sustainable product. And that's usually a theme every year, or has been a theme in the last 2 years. And I think that'll continue to be the case here this year. So anyway, what it means for you guys, if you guys are going to be a Commodity Classic, reach out, let us know, send us leave us a comment or send us a note there so that we can plan, to get to meet up and get to know you and shake a hand. That's what we're there for.
And practically speaking, for folks who would like to meet up with us or maybe spend some time, stop by the booth, introduce yourself. Every
2005.
Every night, Zaner Ag Hedge has something going on. Ted's there, Matt's there, Dan, the whole crew there for Commodity Classic, and it really is a great. I mean, we always manage to have a really great time, don't we?
Oh, it's the best weekend of the year. This year it's a little strange, Sunday through Wednesday. I've never been to a conference like that, but I think we'll make a good time of it nevertheless.
You think Zaner Ag Hedge will find a way to have a good time no matter what, whether it's a Monday or a Sunday yeah, right.
Or a Lakita parking lot with a pickup truck, right?
Just doesn't matter.
We find a way. We find a way.
Just doesn't matter. Do they have Busch Light? Do they have frosty glasses? We're going to have a great time.
Exactly. Well, I think that pretty much brings us to the close for the week. I mean, it was, I think, generally speaking, this is one of those weird weeks where we're just left kind of waiting to see how things trade out and play out into next week. Market price action was pretty clear that we haven't completely broken out of ranges in soybeans. Wheat and corn seem to be at their lower end of what you'd expect to hold for an uptrend. But I don't know about you, Joe. Is there anything else we feel like we need to add? Do we even get a question of the week from producer Carter here?
Question of the week. We don't want to forget that. Good job, Dan. Question of the week is: what is your favorite state to visit? Tell you what my favorite state to leave is.
Yeah, some of us are trapped here. We bought real estate and we got mortgages.
Can't wait to get back to a state with balanced budgets and reasonable laws.
Real quick on that subject, it's interesting. There is, I believe, a movement in some of the eastern counties of Illinois to try to join Indiana, just like there's a movement in some of the western or eastern counties in Oregon to join Idaho. Isn't that how funny is that? I don't know if it'll go anywhere, but
I didn't want to. I didn't want to bring that up,
man.
Yeah, I didn't want to bring that up. Apparently, a lot of Illinois counties along the western side of that state line are trying to get on the eastern side of that state line, but Dan, frankly,
how crazy is that?
As somebody who does not live too far into Indiana, rather close to Illinois, I think we're pretty full up on the Illinois people. I mean, at least for this year. Maybe if you guys want to, fill out an application, we'll be sure to keep it on file. But the Hoosier State, we do our best to accommodate immigrants from all kinds of places. But maybe the Illinois people, if we could vet you all individually, maybe that would be best. You know what I mean? Before we start letting people just jump over the border. I just don't think that would serve us. I don't think that would serve us the best. So fill out that application and we'll do what we can. I got you guys. Don't get me wrong, Dan. I know you. If you decide you want to get across, I don't know. How many states have you been to in the United States? Like favorite state to visit?
So for me, it's easier to say the states I haven't been to. Never been to Utah.
Okay.
Yeah, and Nevada, and Maine, New Hampshire, and Vermont. Those are like the only ones I haven't been to yet.
Okay. Yeah, I haven't. I have to.
Hawaii and Alaska as well. I haven't been to. I've been all over the continental U.S., but
I really like Texas. I don't know. Is that politically? I don't know where Texas stands these days on the politically correct or not politically correct, but I'll tell you, you get down there, man. They got their own electrical grid. They got a lot of great seafood. They got a lot of great barbecue. I mean, seafood, electrical grid, barbecue. That checks off
I like how you went to seafood for Texas, man.
You get along the coastline, man. I mean, you're just driving down the road, and all of a sudden,
disagree, right?
Holy cow! I really
You're not
like
wrong.
Texas.
That golf cooking is good. I'm partial. I got two favorites: South Carolina, specifically Hilton Head. I love the low country there. For the seafood, of course. I could do me some sheet crab soup and blue crab all day long.
Oh, yeah.
But my other favorite is going out west, right, to Montana, Wyoming. I'm going to have to, put up a tie between those two states. I just love the Yellowstone area. I mean, you can't go wrong with the Tetons, specifically Jackson Hole, all the way up through Yellowstone. That's one of my other favorite places in the world.
Yeah, I got to get out there and check that out. That sounds great.
Oh,
make for a nice motorcycle trip, I bet.
You got them. Yeah, that's for right. You do have some cycles, but it does. So anyway, thank you for listening to the Zaner Ag Hedge MarketCast today. If you need more from us, you can always get in touch with us over here at Zaner Ag Hedge on
just
Facebook,
can't get enough.
On Twitter and LinkedIn at the Zaner Group. If you have a question and you want to get on air, like on today's show, for example, there's a link for you to do in the description to do just that, and just follow the instructions, and we'll answer it right here on the air for you. Thank you again, and be sure to like, comment, and follow the podcast. Do not miss a beat, and we'll be back with you next week and as price action develops.
Thanks, everybody. See you at Commodity Classic.